Okay, good afternoon, everybody, and welcome to this edition of Ask the Experts. It's not called Ask the Experts anymore. It's called Live Market Analysis. The think tank at ThinkMarkets got together, and they felt that live market analysis was a far more generic but accurate description of what I do. So we won't be referring to as Ask the Experts anymore, maybe because I'm not an expert and there's not plural of me, there's just one, but we're going to be live market analysis. This is the ASX edition. We've got some incredible things planned for you today with this format. So now you can ask me about anything today, of course, but in the future, Tuesdays at 1 p.m. will be our ASX editions, ASX shares and ETFs. We plan to do other editions through the week. For example, one that just focuses on commodities, foreign exchange, indices, crypto, the other stuff outside of stocks you can trade. Also, I'd really like to do a US equity session because I've been having a play around my own personal portfolio since the NASDAQ, I felt, started to turn up. You might have heard me speaking about this in the media, and I've been running my scans. Same scans I run in Australia, but running in the US, and I'm finding so many fantastic charts to talk about. So I'd love to do an edition specifically based upon that. And we'd like to do some clients-only editions specifically for those of you who are ThinkMarkets clients. But welcome back, everybody, to this edition. Over to you. Find the Q&A window, get those requests rolling in. I'll give you my best technical and fundamental readers on those. We might kick off with the good old Amy broker. William was first in for 2023, and he's asking about AUB. It looks great in terms of the trends. So again, for the uninitiated, always new people coming in, I'm a trend follower. I'm not a prognosticator. So there are different styles of technical analysis, just like there are different doctors out there that one will look after your ears and the other one will look after your feet. Okay. I'm not let's say the ear doctors, they are prognosticators. They predict based upon technical analysis what's going to happen in the future. There will be a top on this stock or this index on that day. I don't do that because I can't tell the future, unlike those very, very clever people. I'm a trend follower, so I'm a reactionary trader. I need something to happen before I can do anything because I don't know the future and I can't know it. Now, you might say, well, I'd rather know the future, Carl, than just react. And I say, well, that's good. Go and follow a prognosticator and see how you go. Basically, I need to see how demand and supply are interacting in the markets. My basic assumption is that I know nothing, and the market knows everything. The market is run by people far smarter than me, with more money than me, far better resourced than me, and better access to insider information than I have. And they get together and they decide what's good and what's not good. And the stuff that's good, they throw their money at it. And the people who already own that good asset, they don't want to sell it. So you have very limited supply and significant demand. The price will go up. The opposite is something isn't good, and they know it. You might not have figured it out yet, but they know it. And if they own that asset, they'll be trying to offload it like crazy to go buy something else that is good. And if there is cash out there, it won't be seeking that asset. So with that context for today's session, let's look at some charts. AUB, I think, has a good trend. Okay, so I start off with my trend analysis. My ribbons on screen are no secret. I hope you've already programmed them into your trading platform. So when I hover over there, you get to see what they are. We've got EMA 21 and EMA 34. So no secrets for me. My goal here is to teach you as much as I know. Okay, I need to get the stuff out of my head and into your head so you can use it. And then I've got they're my short-term trend moving averages, and I use a little bit of fancy formula work to color it into a ribbon. No big deal. And then I've got my long-term trend ribbon, and they the 144 to 33 EMAs. You might say, hey, Carl, why those? Look, first and foremost, they're the ones I found worked the best over a long period of time over the most stocks. Okay, so it's not just working for a little while over a few stocks. They work. And if you're already using them, you know that they work already. Okay, so green is good. Pink or dark pink is bad. I don't use red because it just makes it hard to read some of my labels on my charts. So pink, dark pink is typically downtrends, and orange is, stay out. We're not sure yet which way the trend is going. So basic trend direction. Obviously, if the moving average is moving further apart, we've got greater momentum in that trend. So that's always nice to see. When they're converging, we can see that the trends tend to falter a little bit. We like to see that the price is trading above that trend line. That's also very, very positive. We do find, however, when the prices do come back to the trend, we can often see them trampoline off those trends. for example, here. It also happens in the long term, potentially when they're rallying up to those trends, we can see them the opposite of a trampoline, whatever that might be, resisted. So in that way, we find that these trend zones tend to act as what I call dynamic support and resistance. Now, the other key part of what I do is static support and resistance. So key areas from the past, you can see this peak in here, that is 26.13. And my view is that in the past, there was a significant amount of supply at that level. You might say, hey, Carl, Smarty Pants, how do you know there was a lot of supply at that level? Did you go into the market and ask everybody who was trading AUB around January last year whether they were supplying or demanding? And I say, well, I don't need to do that. I can see clearly on the chart there was a lot of supply. Why? Because the price went down. So any demand that was in the system was overwhelmed. It was met and then overwhelmed by the supply. And there wasn't enough demand coming back in to fix that problem. Okay, so plenty of supply in at this level. And what I find, my experience, suggests that if there was supply at that level in the past, there may well be supply there in the future. A lot of that supply is to do with the fact that there were a lot of people getting into AUB, probably at that time, because it looked hunky-dory, right? So at this time, a lot of people got in. When it got to here, they said, don't worry, it's just a pullback. Have you ever done that? Don't worry, it's just a pullback. It's a great quality stock. It's got a great dividend yield. It's got great growth. It's got a low PE. It's going to go back up. And then it gets down here. No, it's okay. It gets here. No, it's fine. Oops. Oh, gosh. Geez, I wish I sold at 26 bucks. So we're here now. Please, God, if you just let AUB go up to $26, I promise I will sell and I will never trade again. So not everybody's thinking like that, but some of them are definitely thinking like that. And it's those people that could create supply at this level. Okay. So I know there's a lot going on here, but I'm just trying to give you an idea of how my eyes see any chart. So the next thing I'll look at is price action. This is good price action. Okay. So I'm stylizing here within these lines. Imagine within these lines, there are candlesticks. Okay, we'll get to those in a second. So in here are candlesticks. But to illustrate again how you would stylize, and I'm just going to do this ultra quickly just to demonstrate the concepts. And if I was doing this more carefully, there would be probably more picks and troughs in there. But this is what I mean by there are candles inside these lines. But basically, this is what we call good price action. Good price action. Obviously, that's good if you're going long. This is good if you're going short, but bad if you are going long. So this would be, I guess, bearish, probably a better way to put it, bearish price action, and we'll call the other one, I guess, bullish price action. Now, it is even better when we find that the last troughs are not interacting with the second from last peaks. So if we say that this is the last trough, and hopefully this is a refresher for everybody. I know you want me to look at stocks, but I think at the start of the year, I just need to remind everybody how I do stuff. And then don't worry, we'll get through plenty of stocks today. We'll do them quickly. And this is a P now, obviously P for peak, and this is our P2, and I will rectify that. So if we say the last trough T1 is at or above the second from last peak, this is actually going to upgrade this to what I would suggest is great price action. Okay. And it goes for the reverse. Obviously, the less interaction the last peak has with, we'll go P1 there, and this is going to be T1, and this is therefore going to be P2 and T2. Okay, the less interaction P1, the last peak, has with the second from last trough, the more bearish that setup is. Okay, so first of all, we're looking for what the trend is, and I need to see preferably double green. I can go for an orange long-term uptrend if the short-term trend is very strong, the price action is very good, and this final component that I like to look at, which is my candlesticks. And this is probably the most important thing for me on this particular chart, because I like to see white candles. I like to see big white candle bodies. So the body of the candle is the box part. So you imagine here's my candle, and let us say that it is an up candle, so I'll make that black and we'll fill it in white. I know you can't see some of the things I'm doing, but the end result is what's important. So that is the body part of the candle. And then we have what we call shadows or wicks pointing out of each side. I prefer to call them shadows because it's generic. A wick you would expect to be poking out the top of a candle, not the bottom of the candle. So white candles and more of them. And I think that's where AUB fails, but it would be one of the few places it fails. The other thing is the price action is very overlappy. So we know what good price action is. The price action I prefer to avoid is this sort of price action because it does indicate significant indecision in the market. These areas of the old peaks, really, the old peaks should equal demand in a pullback, and yet we pierced that demand, right? So let's go, does not equal, if you're a programmer, does not equal demand, or does not equal sufficient demand. Whereas here, we can see that the peak, when the trough came close to the peak, we saw great demand come in. And for many of the same reasons, we saw that there is this sort of ex post regret when you don't get out of something that falls. There's also this ex post regret of selling something that goes up. So you think this is a peak here. There was supply at this peak. How do I know there was supply at this peak? It went down. The price went down. You can see that. So there was supply. Some people supplied here. Not many. Why? Because look at how well it's doing. There's more demand than supply, but some supplied. Now, those people who supplied in this area in here, so I'm talking about the people who supplied in here, think about how they feel up here. Oh, I never should have sold that. Why did I sell? I knew that was the one, and yet I sold it. I sold it for a measly profit. What an idiot I am. I knew this was going to go up way more. You know what? I need to buy this thing back. Okay, not everybody's going to think like that, but many people do. And on any pullback coming close to their exit level, right, they're going to start to buy. And that buying, that demand, interacts with the demand, which I know was already in the system. And it overwhelms the short-term profit takers. There are always profit takers in any trend. And this is why we need to see this last trough come in at or above the second from last peak. So, William, to answer your question, I think this is fine. If I had it, I'd probably hold it until it gets pretty close to here, and then I'd be starting to take some profits on it. If I didn't have it, I don't need to rush into it for a few reasons. Firstly, there are too many black candles, and I don't like that. Secondly, the price action is not perfect. Thirdly, in terms of reward to risk, it's very close to where we might see an influx of supply. So if I was to buy it here, I've only got a little bit of upside until I encounter some of that supply. And if it was to pull back, my demand levels are in and around these dynamic zones. So if I said, well, that's my upside until I'm going to have a problem, a potential problem, and if I'm going to get out around here because I'm starting to feel that's not going right, I've got very little reward compared to risk. Okay, so I can see a reason if you've got it to hold it and try and get $26 for it, but if you don't have it, I'm not a buyer today. So hopefully that just gives people an example of how I go through my thought process every time I look at a chart. What I'll also try and do for you today and in these sessions for the rest of the year is to give you a fundamental valuation on the company. Now, I'm not going to go into every company and look at its ASX announcements and find every director interest change notice or what share buyback scheme it's going on at the moment, nor will I attempt to look at the company's annual report and delve into its company financials. Now, I can do that because I am what I call classically trained. I can do all that stuff and come up with a discounted cash flow valuation. But I choose not to. What I choose to do is take the consensus data from Thomson Reuters Refinitiv Icon. You've probably heard of Thomson Reuters. Refinitiv Icon is a product which ThinkMarkets pays about $2,500 a month for me to have access to. So think about what that, the level of research and information these guys are providing, and the professionals that are working using this information, because it's it's one of the industry standards. This Icon, this Bloomberg, this FactSet, right? So they go and collate the data, in this case on AUB, from 9 brokers who are contributing to them. And they ask the brokers, look, what's your average price target? What's your average rating, for example? And please tell us what your forecast numbers are, for example, for revenue, because this financial year isn't over yet. We're only, 7 months into this financial year. So let us know what you think AUB is going to earn for the full year, all the various metrics, and we're going to put that together, and we're going to call that consensus data. So my philosophy with my fundamental analysis is identical to my philosophy with my technical analysis, and that is I don't know better than the market. So much like I will take what the market is doing in terms of supply and demand and come to a conclusion on whether I would prefer to be in or out, I will say the people working at, and we're talking about the likes of Macquarie Bank, Deutsche Bank, Credit Suisse, Boston, UBS, Bank of America, and the list goes on and on and on. Okay, Citigroup. They've got whole research teams on huge whole floors in Sydney right now, literally beavering away, coming up with these numbers. So why would I try and work out these numbers myself? What advantage, what comparative advantage do I have in my skill set to say that, no, AUB's revenue is going to be $935 million next year. And if you're doing fundamental analysis right now, your own fundamental analysis, I think you need to rethink your strategy on that, because don't take this the wrong way. I mean, no disrespect. You're not as good as them, and you never will be. Okay. So I prefer to say these guys know more than me, and therefore I'm going to make my decisions based upon the data that they've provided. And I've got a fancy little spreadsheet that does some of this, but it's based upon some pretty simple themes. So I need to know. Next place I go is here. I actually don't need to pay a whole lot of attention to this because the spreadsheet's going to do some fancy stuff for me and work stuff out. Okay, so EPS line. I need to know if the company is growing its earnings, and obviously earnings growth is better than earnings contraction. And we can see based upon the next few years expectations, so this year to be finished, and then FY24, FY25, FY26, the brokers are expecting about 14% compound annual growth rate. Now, the average compound annual growth rate for the Aussie market over a long period of time is about 7%. You know, in a bad year, it might be a few percent lower. In a good year, it might be a few percent higher. So this is going to grow at roughly double the market's average compound annual growth rate. I should mention, by the way, for William, the target price of AUB is 27.16. That's the average target price by the brokers, but there are some brokers that are thinking it could be as high as 31.30. It could be as low as 24.50, and there's a standard deviation $2.28 on that mean. Okay, if that means anything to you. In terms of their ratings, it's quite positive for AUB. So we've got 1 strong buy, 9 buys, no holds, no sells, no strong sells. And that's quite rare actually to see such a unanimous vote of confidence in terms of broker ratings, whatever that means to you. We can see down here that their target is at least 10% from the current price. Okay, so there's potentially 10% upside. Now, if I don't do anything, so my basic settings, and I have these set at default on purpose, my basic setting says that my opinion would be that AUB is similarly undervalued by about 8.6%. So I'm not that far off from the brokers. Okay, but where we might change is the target PE. So we might say, well, I don't feel comfortable paying 18.6 times earnings for a company that has 14% growth. And then I would need to mark down this PE. And note what happens when you start to, I'm going to use a target PE here, start to bring this down. So if I go to 18 on the PE, you can see the valuation comes down. If I go to 17, you can see the valuation's coming down again to the point now where it's actually fair value. Okay, and I could go to say 10. If I was only prepared to pay 10 times earnings for a company with 40% growth, then AUB would be grossly overvalued. Okay, what I can do here is say, well, what does the market think? So this is the median of the broker forecasts, and they're using 18.6. Why do they use 18.6? I don't know, and I don't care. They just do. And that's my message when it comes to fundamental analysis. That's why I don't muck around with this too much. Sometimes I'll have an opinion, and I say, well, now personally, I wouldn't pay that. But if the brokers are all prepared to pay roughly that, then I'm happy to go with their better judgment. And clearly I'm not far away on my valuation. We can see also, if you look at the historical PEs, that is actually a really low PE, which means it's a high hurdle rate. So to still have value at that low PE in a historical context, I think is actually very good. And I would certainly pay 18.6 times for a company growing at twice the market's growth rate, because the market typically grows at 7%. It has a PE of about 15. All right. So yes, I would happily pay more than 15 for double the market's rate of growth. I don't think I need to do a whole lot here. I don't know enough about the business, honestly, to change the next thing, which is my risk rating. And this is the discount rate. And obviously, the higher you discount a company's future earnings, the more punitive it is on the company's valuation. Okay, and you can see there what I'm doing is changing the interest rate at which I'm discounting the company's earnings based upon my perceived risk level. And this is where you will find the difference between, say, 31.30 broker, my target's 31.30, and a broker who says my target's only 24.50. Okay, they are changing these factors in their spreadsheet based upon their perception of the macro environment, that is what's going on in the world, economically speaking, and the micro environment, and then also other company specific factors as well. Okay, so if you know as much as them, you can certainly go and play with any of these factors. Otherwise, I would probably just stick with default and say, hey, William, there's a little bit of upside there in the chart, and it's not too bad on the valuation as well. Okay, we are going to go lightning fast on everything else, ladies and gentlemen, because I think we have done a pretty good intro to how live market analysis sessions work. Okay, let's go back to the charts and let's fast forward. Next one was from Tim. A2 Milk seems to be looking good. Now, if you've been with me for a while, you know we started looking at A2 Milk. I reckon it was all the way down here. Now, Tim will either be calling bull on me. I can't hear you, Tim. Or be saying, yeah, Carl, that's pretty much where I got it, because that's when we started talking about it. So it's done pretty well. Tim's no doubt wondering, well, what do I do with it now, smarty pants? And I think even back here we said adding a third. Oh, okay, adding a third. And then I think we said we're probably going to get rid of a third up here at 745 because it's a major point of supply. And you go, well, why is that a major point of supply? Okay, we'll zoom out. That's this level here. It got pretty close, Tim, but it didn't get there, did it? And it's probably because there's a bunch of other traders out there all thinking the same thing. All thinking, well, I know supply is going to kick in there, so why am I going to hang around till it gets to 745? I'm going to get out at 725. And that's the high there is. Let's have a look. That eye there I'm trying to find is, and if you don't know where to look, now look up here, look over here, and it gives you the high on the bar, the low, the close, the open, the volume, and the moving average settings. Rising short-term trend, rising medium-term trend. Don't worry about those too much. That's just more sometimes it's hard to tell if the moving averages are going up or down based upon, they get flat sometimes. 1 means yes, 0 means no. So Tim says, it seems to be trading in a tight range near its 52-week high. Well observed there, Tim. Can hear you loud and clear, and welcome back. Okay, good. That high there, 714. I think it's okay. I don't think it's great. What I'm worried about now, Tim, is the fact that we're seeing a little bit of a peak here. This is good. So this is good here. This is good. This is good. This is good. This is good. What we don't want to see is this now. Okay, and that's all you need to worry about. I think this is what's great about this. What's not great about this is it's not going as gangbusters as you would like. Okay, well, shed a single tear. What is good about this is you've got a really clear roadmap, I think, for what to do next. And that's kind of half the battle, isn't it? It's not, well, I'm not making money, or I'm not losing money, or I'm not making as much as I would like. It's, I don't know what to do. That's the bit that sucks the most. And I think we can say very clearly what to do here. I would suggest to you, Tim, and this is a suggestion because it's general advice, you do whatever the hell it is you think you need to do, mate. Okay? But I would say beneath here, the evidence in the market, and remember, I know nothing. Okay? So if you came here expecting to hear a guru talk about all the stuff that you don't know but you should know because you're not smart enough, I've got no idea. I know nothing about what's going to happen next. But what I can suggest to you, this is a suggestion, is that this is clearly a point of supply here. If we turn down, this is only if it does, so it hasn't done it yet. If this turns down, we've got a point of supply here, and we know we have this point of demand here. And I would say to you that if we trade beneath that point of demand, and that low there is 662, Tim, then my suggestion is that supply is building in the market. So we've gone from a market where demand. We've got excess demand, is probably the best way to put it. So let's go excess demand, right? To something where potentially we've got an equilibrium in supply and demand. Okay, and you have to go through these phases. Don't think about it. You've got to have excess demand, and then supply picks up. Why did supply pick up, Tim? I don't know. Maybe it's got something to do with that high. Maybe the underlying fundamentals for A2 milk aren't as great as what people thought 3 months ago when they started to buy it in earnest. Okay, but for whatever reason, either supply's picked up or demand is backed off, and nobody can argue with me about that. Prognosticators, fundamental analysts, and people who I know, because I get the mail saying, "Hey, Carl, you've got no idea what's going on," and I often will say, "Yes, I agree with you," but those technical analysis is a load of hooey. You have to admit that either supply is picked up or demand is backed away, and neither of those things are good. So we're looking for confirmation now from the market. Okay, letting the market tell us what it wants to do. If we push below that point of demand, I'm going to suggest to you that we are now in excess supply. That would be my suggestion. And therefore, it'd be prudent to manage some of your exit, whether that is exiting the whole lot if you feel really nervous about it, or exiting partially. And I often go in a third and then out in a third. Okay, so you've always got a little bit of skin in the game just in case something, Newcrest takeover style happens. Okay, and incidentally, let's head to Newcrest very quickly. I don't think I need to say anything more about that, Tim. I think you kind of get the picture on that. As long as it continues to go up, you've got nothing to worry about, and that is the message you need to take through your entire investing career. As long as it's going up, you've got nothing to worry about. Okay, and there's always going to be stuff to worry about if you watch the media. But understand, as long as the stock's going up, there's nothing to worry about. It's as simple as that. I'm going to get to Newcrest just because I want to talk about something. And I was in the media on, I just said, don't listen to the media. I was in the media on Friday and I said, hey, look, that big black candle there on Newcrest is disturbing. There was a big black candle on gold. I said, typically what I would do based upon such a significant supply event is I would start to manage my exit. So Newcrest is one I called back in late November, early December as quote unquote, one of my 3 favorite gold companies. Okay, well, that was a reasonable call. But I said, take some profits. So that based upon that candle, based upon what gold did, and it was this day here. And I was very clear in what I said in the media. I said, look, what that means to me is taking 1/3 profit off the table based upon the likelihood, the strong possibility that what I'm seeing could precipitate a greater decline in Newcrest prices. That the supply-demand balance is changing. So by only selling 1/3 instead of just getting all out, you still get to participate in this. Okay, now, if you knew that bid was coming, you're a lot smarter than me. But I would suggest without that bid, and given what gold actually got wiped out on that Friday night, I would suggest to you that Newcrest would have been much further down here, and you would have been really glad you took profits on Friday. But the point is that, see, this idea of being all in, of buying everything you thought you were going to buy on this stock at the start and then selling it all at the end of the trade and just nailing that trade, I think that's a really foolhardy way of thinking, because I think you have to be an absolute genius to do that. So I think if you're a person that understands you have, you're not perfect, and that you're going to make mistakes, this idea of entering slowly and only adding to positions as the trend establishes and proves itself to you at that next price action signal, that next candlestick signal, and giving that, I always say, think of it as you've got 2 employees, right? And please allow me this digression, okay? You've got 2 employees. One employee is the best employee you've ever had in your life. Now, this person, let's call her Cindy. Cindy turns up 10 minutes early, clocks in 10 minutes early, just so she can get set for her working day. She is diligent. She's great with the customers. Customers love her. They come back just to see Cindy. She has got these fantastic ideas to grow your business. She wants to put you online and get you in social media. And she's just dynamic and amazing and fantastic. Okay. And then you've got this other employee called Paul. Paul's grumpy. He turns up late. He's got bad teeth. Okay. He's rude to your customers. He'll often swear at them. He's stealing from the till. Every time he takes a little bit of cash from the customers, he puts $5 in your pocket, and he actually doesn't. He's not too shy, but he's waving, hey, Carl, check this out, pal. And then it goes into his back pocket. Okay. These are your 2 employees. Now, what are you going to do with these employees? What are you going to do with Cindy? Are you going to say, hey, Cindy, you're doing amazing, but there's the door, get lost? What are you going to do with Paul? Hey, Paul, you suck, but I'm going to keep you around. Okay? Your job with your portfolio is to hang on to those bloody Cindys as long as possible and continue to reward them. How do you reward Cindy? You give her more money. You will not let her go. You want to hold on to her. Same with the winners in your portfolio. Give them more money. Hang on to them. They are doing the right thing. But what do you do with the Pauls in your portfolio? Do you hang on to those? Do you let them continue to steal from you? And I suggest to you, you need to get rid of those Pauls. All right. So how do we get onto that conversation? When the stock's not doing the right thing, they're starting to be Paul. Now, obviously in real life, you get rid of Paul straight away. But hey, 3 warnings, isn't it? 3 warnings. There you go. A third. We've got to go through the process. Maybe I've got to tack that onto my analogy. By law, you've got to give Paul 3 warnings. So you've got to give the stock 3 warnings as well to get out. But also, as the stock is doing the right thing, you continue to reward them. Anyway, hopefully that resonated with you and it might help you with your investing. down the track. Let's get on to Glenn. We're going to go to XRO, which I think is starting. You bugger, Glenn. I was hoping not to get a question on XRO today, to be honest, because last time I was here, I said no, I would not buy it, wouldn't touch it with a 10-foot pole. And why? Because, well, it was probably down here, or December was our last one, was down here. And again, I can't tell the future. What I could say is that it was building somewhat of a basing pattern, but geez, even then, you're squinting and you're a bloody genius. If you knew that it was going to go up from here, like, congratulations. Oh, but Carl, it was too cheap. No, it wasn't, and I'll show you why it's not too cheap in a second. Look, it's got itself a short-term uptrend. It's got itself a little bit of price action and some candles. It's got to deal with this. So if you've persevered with it, despite my reservations, don't forget, I've been telling you to sell Xero the whole time. So eventually I have to get it wrong. That's the thing about trend following. Eventually the trend will change and you'll get it wrong. Hopefully I can tell you it's going to change first. And I can see things like basing patterns. I can see things like the right candles of the price action. I just haven't been around for a couple of months to be able to do that for you. And then the most I would do is say, look, I think there's enough in there to hold it, but I couldn't buy it. And that's where I'm at right now. I think there's enough in there to hold it because the short-term trend's turning up. In fact, the long-term trend has gone back to amber, neutral. So potentially there's a change, but I cannot tell you to buy it because the long-term trend is still a monster. And we can see in the past just how good that long-term trend was at determining where a fledgling and a promising rally, because it kind of looked promising there too, didn't it? And you would have been boasting, hey, Carl, I told you it was too cheap. But yeah, I'd just be cautious. Now let's get rid of some of this stuff and let me give you some ideas on what to watch out for, much like with the A2 milk. Okay, what do we want to see? The good stuff. So obviously a push back up. That was not an earthquake. That was me bumping the microphone out. And what we want to see is the high peaks and high troughs. All right, so we can see we already have high peaks and high troughs. There we go. There we go. All good. And let us, let's draw that one. Let's draw that in there. So that level is, I'll give you a number. I'm always fighting with Amy Broker to do the right thing for me, 85.50. So close above 85.50. And you know what? It's actually starting to look half decent here. It's probably looking pretty good. But let's see what it does when it gets there. Look, that's the best case. The worst case scenario, what you don't want to see is much like what we saw on A2M. And I don't have to do too much on this because we've already talked about what the building supply means in the market, where you've got this POS, if it forms there. We know we've got a POS here. Hey, Carl, how do you know there's supply at that level? Look at the big black candle. I mean, there is supply at that level, and it followed through. It didn't bounce back very quickly. All is not lost, but if it was to sort of put in that pattern, then you could, manage your exit, right? Because it's being a bit of a pull. That's the picture there for ASM. I'm waiting for the price action to turn around here in line with this improving price action and trend, and therefore the reward to risk probably would look good if you can get in on some nice candles in there. And then I will go back to AVA, and then I will show you this huge triangle or pennant pattern, and I will suggest to you that with respect to the measured move, which is the height of that, it could break up or it could break down, and therefore it's not really a game I want to play, and the moving averages are very, very flat and very orange. Okay, SRG from Arjit's SRG. This is our engineering mining services company. It looks great, Arjit. No complaints here. If you have it, I think, there's absolutely no reason why you wouldn't hold it. No reason why you would sell it. If you didn't have it, I can't see any reason why you wouldn't go buy some today. The only caution I have here is that the nature of the beast. The nature of the beast is sketchiness. Okay, so possibly you get a move into, I don't know, if you measure this move here, it's about 8 cents. You could get a move into sort of 80, and then it might go sideways for the next 3 months. Okay, that would be my only cause for concern. If I zoom out to the weekly chart, I'm probably less concerned now because I think it looks really, really good. Yeah, I can't. There's, maybe there's a bit of supply in here, but the trend is so good here. You can see how long it takes. The weekly chart shows you how long you could be waiting for the move to occur where you finally get up to 95. But I think it looks very, very good, Ajit. So my opinion is stick with that one. Because you gave me such a nice one there, I'm going to do your second one here, AZS. And it's not bad. but it needs to do a bit of work, doesn't it? And I would suggest to you that we do have some supply here. And now that I've tuned your eyes in, you can see with the price section of the candles, this is a very clear supply zone. And until we eclipse the supply here, we know there are sellers, very motivated sellers in here doing their work until we can get rid of them. Okay, we need to trade with them. The only way you can go up is if you have excess demand, and the only way to have excess demand is to knock out that supply with a bunch of cash. And there are some fairly positive signs in here, but not enough to get me excited enough to run out and buy it today. Okay, could I hold it? Yeah, I could probably just squeak in at a hold, but there's probably going to be better stuff out there even on that basis. Okay, let's go Silex in Australia. I think there's enough in it here, Brett, to call it a Paul. And you might say that's a bit unfair because it's been Cindy for a long time. But I just don't like these last two candles. So I don't like that. I don't like that because when you blend them together, they end up being one big black candle, and it took out what should have been a point of demand, and that point of demand is here. So here, and then we've got, so if I label it, you go, here's your point of supply. How do I know it's supply? Well, it didn't stay up there. There's your point of supply, and there's my point of demand. So you know what? It's 2/3 at Cindy and 1/3 Paul, isn't it? So for me, and again, you got to do whatever you got to do, but this is what I reckon, because I've still got this much skin in the game, and I would not suggest to you doing any more than 1/3 because of this stuff here and this stuff here. Okay, it's done the right thing for us, so why would we penalize it any more than that? And I tell you what, if you saw, and this is actually something I haven't done today, have I? And I normally do it in these sessions. If you saw that candle there, Brett, or its best buddy, okay, you know I call these my demand buddies. So if you saw its best buddy, which is this one here, Brett, I think you would be looking to add back in. And you might say, hey, Carl, that's a pointless exercise. Why would you sell 1/3 and then 2 candles later do this? Because this is actually what I'm suggesting. If I saw that, I'd do this again. Right? Why would you bother? What's the point of that? Because I don't know what's going to happen next. All I can see now is that supply is starting to build. Is it starting to build for 5 minutes, 5 days, 5 weeks, 5 months, or forever? I don't know. If I see these candles come in, I know that supply is not a problem. It's just a pullback. There's always stuff that just pulls back. Okay? Stuff can't go up in a straight line. But this is telling me that I don't need to be worried, and therefore I'm going to reward it again. And that's just the way I think. I'm not fussed about selling out at 433 and then having to buy it back at 460 for 1/3 of my position. It's totally irrelevant. It's meaningless. Stop keeping score by where you got out and where you got in. Keep score based upon, am I doing the right thing based upon demand and supply, or am I not? Okay, thank you, William, saying great teachings. I'm not sure what was great, but hopefully I'd said one great thing for you today, and then I've accomplished my goal. Perry said a very important saying, and I do love this one, garbage in, garbage out. That means if you are doing the wrong thing, you're going to get the wrong result, right? So try and do the right thing. You won't get the right result all the time, but over a long period of time, you should. Anonymous, hello, Anonymous, saying BOE exclamation mark. It must be good. That's not, again, we've got the American one. You can see I've got American and Aussie shares here. BossEnergy, I've noticed this. Don't get me wrong. I've seen this coming from oblivion and horribleness into this. And this is just what uranium stocks do. They start to look good for 5 minutes, Anonymous, and you know that. I'm not being insulting to uranium stocks. You know they look good for 5 minutes, and then they look bad for another 5 weeks. Oh, look, I don't know. Is it a clear one? Is it clear cut where my trends are just flying up the screen? Is it clear cut where the price action is magic, where the last trough is not interacting with the second from last peak, and the candles are all white? It's not. It's hard. It's hard to definitively say one way or the other. And I think if you have to work so hard to do analysis on something, you've probably got your answer there. I don't think this is the worst one that we're going to see today, but I can say with absolute confidence it's not the best one. And for that reason, I don't think we need to do any more analysis on it. What do we want to see to say, look, this is starting to look better? Okay, so something like this with those demand buddy candles all over the place, thick and fast. in that price action. And then we can start to think that this long-term trend, which was under serious pressure, is starting to reassert itself. And we have a possibility of coming up and testing $3. But even if we do that and break this zone, there is a whole heap of supply. There is a wall of supply up around that area. This is a major point of supply up here. So why are we entertaining something that is just going to be so difficult for us? If you don't think it's difficult, that's Boss. Boss is difficult. And if you own Boss, you are not taking any offense by anything I'm saying to you, because I know you agree with me. PMT is Patriot Battery Metals. This one looks fine. It's definitely more Cindy than Paul. And if you've just tuned in, you're going, what the hell is this Cindy Paul thing? Okay, Cindy and Paul. Cindy is a stock that's doing the right thing by us. We're going to continue to reward it, and Paul is stealing from us. This is not great here. I'm not happy about this, but it is not enough yet. It's not enough yet. Is it not enough yet? And again, if I pause, I'm trying to put myself in your shoes. I'm trying to say, if I had skin in the game on this, honestly, in my heart of hearts, what would I do? Hey, today's candle's not finished, but let me say, if today's candle finishes, let me do an update, because I'll have one. So off screen, I'm doing an update of the data. I get hourly snapshots from the data provider, which is Norgate Data. So let me say, if it closes lower than today, I think if it closes at the low of yesterday or below the low of yesterday, so if it closes at 179 or lower, then I'm going to go nuts. But this is what I would do. So I'm still plus 2/3. I just think this 2-candle pattern is enough to take a little bit off the table, and we can always add to it if it starts to do the right thing. But it has had a really good run from 70 up to $2. And the other thing is, okay, there you go. Hopefully a few of you were screaming at your screens just then. Nobody caught it, but you should have caught it. The other thing is the round number there at $2. And my round number schedule, I've given this to you before, but I might just give it to you again. So if you think about below $1 is tricky, because what's a round number below $1? But let's say 50. Oh no, you know, you've traded these little ones. You know, 20 is psychological. You know that 10 is very psychological. You know that 15's not. You know, 15's irrelevant. And then you might have seen that 30's no big deal, 40's no big deal. Is that weird? Hopefully you're agreeing with me. And then there's really not a lot, like 60, 70. I mean, they all have some significance, but not hugely so. You don't tend to get these big aggregations around those zones. I'm going to go $1 next. And then above that, 150 can have an influence, but not hugely so. $2 is important. And then you find that 4 is interesting. And notice I haven't put 3 in there, because it's you find that human psychology, and there have been studies done to demonstrate this. We don't focus so much on odd numbers as we focus on even numbers. So 4 will have more influence than 3. 2 will have more influence than 3. Obviously, the rounder the number, the bigger. 5. Certainly, we will look at a 5 and we'll say, well, that's a place I want to get out. And the whole psychology here is, if you got in at $1, where do you want to get out? You want to get out at $2. Not everybody's going to think like that, but many people will, and that creates supply in the market. So we're the people that got in at $1, yes, they were, and here they've doubled their money. So their automatic thinking is get out. And then you'll find there's not a lot. 750 is not that important. So 25, so 25's 50, so quarters of a century, that you can often find those to be quite interesting. I mean, 6, possibly 6, 8, 10. They're not going to be so influential there. Okay, I'm going to go 10, and then I'm going to go 15s, possibly more for Aussie shares, but not for US shares, because they're used to higher multiples. And then you kind of go into that cycle again. We skip the 30s, and then you might have 100, and then you keep going. So in terms of round numbers, so 2 is one of those where you're really looking for signs of supply and taking 1/3 off the table. So I'm going to stamp 1/3, minus 1/3 on that today. So again, it's just me going through the process, and as much as I can, trying to put myself in your shoes. Okay, Nick Scali from Anonymous, which had a bad day yesterday. That was, oh gosh. Okay, so I called this a buy on Friday. There you go. And I called this a buy right here, and I didn't see it coming. obviously they had some their profit results that missed market expectations, and I would say a surprise, no doubt, because it wasn't in the market before that. So if you got in based upon my idea, then I'm sorry that I didn't predict the future as accurately as I should have for you. But all I could tell you is up to that point, it was looking like a nice turnaround play. So the trends were heading up. That was changing. It had broken through there, consolidated nicely through here, and I got a nice candle to push us out of that zone with nothing really in it to here. So here's what you have to do though. Once you get this supply event, that is as major supply event as you get, and given it's taken out so many, you're probably doing at least 1/3, probably 2/3, and maybe even the whole shebang on that. So even if you did say minus 2/3, because it's such a bad candle, it's taken out all demands, and I'm just saying that would be the most optimistic approach. Getting out completely after this candle would be the more sensible approach. If today's candle closes as bad as it is, then you would say that, well, this thing is not even bounced, and you'd be minus 1/3 there. So that would be your best case scenario. And unfortunately, you got tagged by that one, anonymous. So hopefully you didn't get it from me, but there's every possibility you did. MQG. This one is doing much better than last time we saw it back in December. Let us zoom out to normal. What a turnaround. Again, if you picked it, you're a genius. If you knew that China was going to reopen in a positive way and not a negative way, and global markets were going to have this huge risk on rally. What do you do now? Well, the price action is fine. I can't see anything terrible in that. The short-term trend, long-term trend is all good. The candles are okay, not great, and simply because of this cluster of black candles in there. In terms of where you're probably going to find some demand in the system that can give you some defensive positions, or some indications that if you close beneath these defensive positions, you would want to be exiting. Probably there is a significant demand zone. Why? Because it was a supply zone from the past. Previous points of supply tend to act as points of demand. In terms of where you might encounter some supply in the market, then up here I think is quite obvious, and you might even find that this area is quite what's the right word? Pronounced is not the right word, or it's diffuse in that 200 might be an issue there. So at the moment you're stuck in the middle. It's a hold. I can see every reason to hold it. The last few candles probably aren't sinister with today's candle. A caution, but not a death sentence to trim, to manage your exit. So I can see every reason to hold. Where that thesis might change, as I said, certainly if you're down beneath here, you would be trimming some, and then look, maybe even below here, but that's that would depend on the type of candle that pushed you through there. So if you saw a big black candle that closed beneath, let's say 188, that could put you out of 1/3. So let's just label that for next time, minus 1/3. And certainly down here, you would be very much subtracting 1/3 off that one. And AS2, Askari Metals, that's also had the most almighty of almighty reversals since we last saw it. So we last saw it down here. And again, it's been a beneficiary of a change in market sentiment. What to do now? Okay, well, I'm happy with these candles in here. You can see the lower shadows coming in. So I can go a hold on this one. I don't think I'm a buy. And I couldn't be a buy until we see at least some confirmation of this level. So let's say we saw something like that with the demand side candles coming in that zone. That would be a big tick to start to add. So I've done a lot of minus 1/3. Let's do, say, a plus 1/3 in here. I couldn't do any more than that because I do believe there is a significant amount of supply in here, and certainly enough supply to warrant some caution on this one. And note also that that supply really is not that far away from where we should expect to see a great deal of supply as well. So yeah, look, I can hold it. If I got some really great candles in here, I could consider adding risk to it, but otherwise I think I need to be cautious. Were these sufficient enough to exit some? I do believe, yeah, look, I mean, look at this big shadow into what should have been supply. You could have looked at that candle there and thought to exit some, and maybe even on this candle here. If it goes wrong, this is how it will go wrong for you. Okay, so you'll see maybe it push into here. You're going to see some candles that look like that again. So that candle there, you're going to see a candle that looks a bit like that candle there. If you see that candle appear in here, okay, and it has a lower high than this candle here, that would indicate that your supply is building. If it is sufficiently black or with a sufficiently long upper shadow, then I would exit some straight away, and then I would be looking to exit if there were further price action signals to the downside. And certainly beneath this level here, I think it's all over Red Rover. That low is 61.5. If you are watching on any of the streaming services, come and join me in Zoom. I did, to be fair, preference those questions today. So if you didn't get your question answered and you were streaming, the way to do it is to hop into the Zoom session. You can register at www.thinkmarkets.com/AU webinar. If you are not a client of ThinkMarkets, well, you certainly should be, because we are the good guys in the Australian broking scene. And I do mystery shop other brokers from time to time. And I tell you what, there's a particular broker that very recently put their brokerage rates up on US shares. I will not mention who they are, but I did try and get in touch with them. I could not access them via their chat window at all, just no response. Their phone was effectively off the hook with an automated message saying that you effectively cannot contact us. And then when I did finally send them a message through their app, it took them a week to get back to me, and from a number that was based in Brazil. So I didn't even answer it, because why would you answer a number from Brazil? If you are with us, you can call us. The number is on the website. You can message us, you can chat with us, and you can talk to a real person very quickly. That is the difference between us and pretty much everybody else out there in the discount broking scene. That's where we operate. $8 flat rate trade. You might get cheaper, but you will struggle to find cheaper with the service that we give you. And of course, we are HIN CHESS sponsored. That means you own your shares. If you want to trade CFDs, then we have access to all of the key contracts you'd want to trade with great platforms and market leading spreads. And on the great platform, continues to win us awards. Dedicated account manager, as I said, 24/7 customer support. If you like what you're seeing today, hit the subscribe button, and please hit the like button if you like what I'm doing. So it'll tell the powers at ThinkMarkets that I need to continue to do more of it. Apart from that, it's been a pleasure chatting with you today. Sorry about all the noise. It will be gone next week, I promise you. All the best to catch up again. Bye-bye.